The LA probate expert. I'm here with my colleague and partner in crime.
Patricia.Castillo.
It's only she can say it. I can't roll those R's like that. And this is our weekly home buying seminar online. We get together every week and talk about buying houses, buying our next home or new home or first home online. And Patricia, how about that real estate market today, huh?
Yeah, I mean, our rates today are at 6.36 for a 30-year fixed, and they're expected to start creeping up again. I think right now, from what I could tell from this weekend with the open house I had, the buyer sentiment was nobody was really asking about rates. They were just asking, what's my payment going to be? Because a lot of the buyers that came by, I was surprised. I didn't think there was going to be such a large turnout. But a lot of people are still looking for homes. That's just reality right now, even though prices are up and interest rates are actually up. People need a place to live. And I kept hearing that their rents had been increased, and they're looking at next year and how that's going to look, another rental increase. And so they're really trying to combat that by looking into a place. We had a lot of buyers come through Saturday and Sunday. I don't think it
Wow.
was just for the free popcorn. I think it was just because they really, really are shopping for a home.
Yeah, the free popcorn was enough to get me there. Though I have to say, when I saw the video of the popcorn, I thought, how far's Downey again? Maybe it's worth it. It looks pretty good. I don't
It came
know.
out really good.
It looked
Very
great.
tasty.
It smelled great on the Facebook post. It really smelled delicious.
You got the buttery scent.
I could imagine it. I don't know. Maybe it's just my mind playing games with me. So yeah, I think that's the thing that it definitely true. What I've noticed is the demand is not as intense as it was last year, not as intense as it was 6 months ago.
Mhm.
But the reason why rates are high is because there's a lot of money, and because there's a lot of money, there are people who can afford to buy houses. And the choice is not between buying a house and living at no cost the rest of your life. The choice is buying a house or renting a house. And the only thing that's got faster, I think, the mortgage rates and housing prices is rental prices.
Right.
And I don't think that's going to slow down. I don't see, I mean, maybe in some areas, I think in Texas where they build a lot of houses, in Arizona, but where we live in Southern California, I don't see many new houses being built. I see some high-rise apartments in going up, but those rents are very high
Yeah,
because
they're
what
not they're
make
not made for like the affordable, affordable housing. They're
I
for
don't see it.
luxury living.
I don't see it. And I'm on the neighbor council here where I live in West LA, and we're not there. There is not enough. There's more people who still come living here because of the weather, because of the jobs or whatever is going on. And I'm not saying they're right or wrong. I'm just saying there's more people than ever. There's no less. And there's still people buying stuff, and they have money. They're going to buy something somewhere. They're going to live somewhere, and it's not a choice of to buy a house or live rent free. It's buy a house or pay increasing rents. And people
Right.
live in houses usually on rent control. They can go up, 100%. And I've had customers call me with some incredible increases in their rents.
And their rent. Yeah, absolutely.
How's the inventory side though? So let's say rents are going up and they're asking about the payments, and there's some tricks we can use. We talked about buy downs and buying down rates and such.
Mhm.
What's going on with the inventory? Are the houses for sale in Downey, and what's that
Yeah,
look
I
like?
mean, last week we had, 7 new listings come on the market, 4
Boom.
closings. So the market is definitely active. I mean, there's a lot of families that really want to live in the city because of the school districts. There's also a lot of community events that happen in Downey, whether it's at the park, at the library, at the schools. There's always some type of community event. It doesn't matter if it's a holiday or not. There's always some type of community event happening. So I think that's what really draws the people in, because it is really based on the communities and a lot of the small business owners that are, having their businesses here in Downey. A lot of them live in Downey too. So this is a really hardworking community. And the house that I had the open house for, which is in Downey, it's a small home. There's no garage. people usually want a garage, but in this case, because the rents are so high and people are just looking for an affordable home, you know, they were overlooking that. They were seeing past the fact that there is no garage at this home and what they can do with the yard space and how they can expand the home and utilize the square footage in front of the home and expand the living room. So they were looking at those options and just really opening up that vision to seeing what they can do with the property, what the potential is. Because at the end of the day, you're paying your own mortgage once you buy the home and you start living there, you're going to have more equity in the home. And, you know, you can always take out a loan and take out some cash so that you can build on the property. And Downey seems to hold, you know, its values, just like a lot of other areas in Los Angeles County.
Well,
So,
isn't Downey the Beverly Hills of the 562?
it sure is. Mhm. So I know a lot
Somebody
of,
told me
you know,
that. Somebody told me that. I love
Yeah.
Downey. No, I like making fun of Downey, but it is. I don't know if you know the area at all, but I grew up in what's now the 562. It was 2 and 3 when I grew up, and but Downey was like the Beverly Hills of the 562 because it was like the nice area, and
right.
yeah, and you know, I think you know, if you take a look at the market, I think one of the challenges that customers have is, you know, the news always reports such negative information, but if you take a look at the real estate market, like, and this is in my multiple listing service throughout the greater West LA area, you can see that sales are down from where they were the last two COVID pandemics, but even with the sales down, it's higher than it was in 2019, right? This last month in August would have been record sales. It was more than record sales in 2018 and July and May 2019, which was the highest. I guess the pandemic was just starting at that point, but it would have been a record year this past August, you know, but for the pandemic. And so I think that it's true that there's changes in the rates, there's changes in the payments, but the advantage of real estate is it goes up and does not often, other than 2008, go down. Has not gone down, but the rents underneath it are just going up pretty fast. So that's the advantage of buying a house, is fixing your payment for the next 30 years. Or if the payment goes down, the rates go down, you call a great lender and lower your rate, because you're not married to the rate, you're married to the house, you date the rate. But one of our favorite dates as far as rates, did I say that right? Is that okay to say all that? Is Gustavo Segura.
How you
So we
doing?
want to date you. We want our customers to date you, Gustavo. We want them to marry you.
Yeah, and you know, you bring up all valid points right now. Like you mentioned, you know, the inventory that you talked about, Patricia, that was coming out. The houses that are coming in are 800,000, 900,000. How much does that cost? You know, the affordability there. The rents going up. You know, what are the alternatives? And then what you just showed right now, Bill, is that, you know, like you said, it would have been another record year compared to the other ones, but the pandemic really just threw things for, you know, a big curveball. It seems like everybody talked about it is just coming back to normal, you know, standards of what it was previous years. But people are just, you know, getting a little carried away with that it's going down, it's going to, you know, crash, bubbles are going to burst. But it's more of a, you know, we're coming out of the pandemic. The government is trying to get the inflation under control. Rates have got to come up, and you know, there's solutions still to be had.
Yeah, in fact, another statistic on the same page, just to show you guys in our MLS. So it's true that inventory has gone up, but it's gone up to almost the pre-pandemic levels.
Mm-hmm.
With the pandemic, when we thought everybody's locked in and wouldn't buy houses, the truth is people bought houses. There were hardly any houses for sale. But where we are today in August would have been a record low in 2018, 2017. These are like December numbers. So this is an opportunity. In some regards, for a buyer, you have more houses you can look at. It's a good thing.
Right.
And I think in the long run, we have plenty of time before this is a problem. You can see it's slowing down a little bit. Why is that? That's why the rise is increasing, because the initial surprise of the rates, but buyers are saying, well, what's my choice? Well, my choice is to live here with a rent, and they got a rent increase of 25%. And they're all, well, that's not going to work. So all of a sudden the payment doesn't look so bad. So let's talk a little bit about, Gustavo, what options are you seeing buyers use to lower that payment in the beginning years to
Yeah.
qualify?
Well, ARMs are coming back into the market. So an adjustable rate mortgage. So for home buyers out there, that gives you the flexibility of having a smaller rate in the beginning of the period. Now, it is something that you can lock in for 3, 5, 7 years, even 10 years. So that gives you a rate that will be locked in, and you'll be able to enjoy lower payment. After that is going to be adjustable. So you just got to, take a look at your options. They're not bad. A lot of people before, they got a bad rap because they were adjustable for 6 months, and then it jumped a lot and it was adjusting very drastically every 6 months or every year. But now there's a lot of other safety marks in place. So that's one way to do it. You talked about the buy down option as well.
Let's start there. Let's start with ARMs. We'll
Yeah.
go to buy downs. So I started in the business before you were born in the mid 80s. And one of the reasons why the ARM products exist and don't even exist today, two of the real problems. One was what we call negative amortizing.
Right.
What that means is your loan balance went up, not down. And so I had customers who would borrow money at $200,000 and pay their payment on time for 3 years, and they'd owe $212,000.
Mhm.
They understand why. And so you can imagine that if the house doesn't go up in value, but the loan does, that's a problem. Those loans don't even exist today, I'm aware of. Number two, the other kind of loans that there used to be that were the problem were you didn't qualify for the loan, and you had what was called a short-term teaser rate that changed after 3 months or 6 months.
Right.
And so you couldn't afford the payment. Next thing you know, it jumped up. Well, and they would say, well, you just refinance again. And there was a time you could do that. As the houses went up in value dramatically, you could keep refinancing. Eventually, the houses stopped going up in value. You couldn't refinance, but these built-in payment increases were built in to the loans. They were starting at 1%, but they were going to go to 7 or 8% in those days. Well, now the adjustment we have today start at, what's a 5-year adjustable today start at?
So they may start at 3.5%, 4%, and then
Okay.
from there it'll go up. So it's a little bit more reasonable. Like you said, there's teaser rates out there that happened before, but now there's a lot more, like I said, regulation in place, and it eases up. Plus, you have to get qualified for the fully amortized rate. So you have to be able to qualify for that loan now. If it's going to go up to the max of 6%, 7%, you have to be able to qualify for that. Where before,
And so what's the fully
they were just
amortized
doing
on
it
it?
in the beginning.
I'm sorry. So on the 5-1 ARM, what's the fully amortized rate?
I'd rather take a look at it, but it could be fully amortized. It could be around 7% or so, depending on the if it's LIBOR prime. Depending on the market.
Okay. And so what happens is, going in, that's the number. We have 5 years where it's fixed. The idea being, if anytime the next 5 years rates go down, you refinance at that time to a lower rate. And usually you can
Correct.
do that if there's equity at no cost, do it again. And that's what people who bought properties 10 years ago did for the last 9 years, was they just refinanced about once a year as the rates went down and took advantage of it. So those
Right.
adjustable mortgages, they're different than today. And I'm sure you can walk through a buyer with those details. Tell me the second thing. What is the buy down loan product about?
Yeah, so the buy down there's two ways of looking at a buy down. A traditional buy down is if you actually buy down the rate, right? So you're paying a point, you're paying something to buy down the rate from a 5.5 or 6. You're going to bring it down to a 5, 4.5, somewhere around there. So you are actually paying in order to buy down the rate for the duration of 30 years. So that's one way to do it. The other way is if you work with the seller, instead of the seller bringing down the house price, they may be able to give you, $15,000, $20,000 seller concession. You can use that to then offset the first year or 2 years. Traditionally, it's about 2 years of your payment. So the payment is still fully amortized, and you have to pay the full, let's say, $2,000, but you're using that $15,000, $20,000 to each month help you and pay a portion of that payment. So you slowly start jumping into the payment. The first year, you're going to have about a 2% reduction on that payment. The next year, the second year, it's only going to be 1%. And then in the third year, that's where the money is going to run out from that seller concession. You're going to go to 100% fully amortized rate. All other responsibilities on you at that point. So it allows you to have 2 years where if the market changes, then you can refinance and you can get out of there. And if there's still money in that account, you'll end up getting that money at the time of refinancing.
I think when I think if you look at the numbers on the 5-1, the most recent one I did was the rate was a little higher, it was 5.25
Mhm.
versus 6.25 on a 30-year fixed today. 5 years fixed at that. But the index of margin, I think when the index was like 2.25, the margin 2.75, I think it was like 5.0 fully indexed, meaning the customer got the rate of 5.25. Based on today's rates, they've gone up. As much as they've gone up, you'd be at 5% in year 6. And there was a cap on the first adjustment, I think, of 2%
Mhm.
or some amount. And so really you're paying a lower rate than you would today on a fixed. The real, what I would call the real rate, that's the difference between the loans now and the loans in 2008. The fully indexed rate used to be way above. Today it's below where the 30-year fixed would be today. It's a tremendous option that buyers should look at. And if you get those questions, meet with your loan officer, with Gustavo, and they can walk you through those cases. But I think those, to me, seem like a great way to save some money and the buy down as well, to make it a 2-year payment, particularly if you have somebody who's graduating college, let's say husband and wife, one's going to get in the workforce a year from now, or had a baby and get back in the workforce a year from now. Gives you a nice 2-year reprieve.
Yeah.
Are you seeing more interest in adjustable mortgages than fixed rate or buy down mortgages?
Yeah, definitely. In that 5 and 7 year, there's a 10 year as well, but that 5 to 7 year, definitely a lot of interest. We all believe and we all see the market where it's going, and within the next year and a half, maybe 2 tops, we are expecting to have lower rates. So then if you're getting a 5-year arm, you basically have 5 years where you lock in a lower rate, and then you don't have to worry about that adjustable period. So that gives you an opportunity to see what the market's going to be doing over the next couple of years, and then take the opportunity and be able to refinance and get out of that if you need to.
Yeah, one of the things I noticed at for the open house, Gustavo had a really nice flyer printed out with different options, so the buyers can come in and get a true perspective on what the payment's going to be. Because that's really
Nice.
what they were concerned about was, of course they asked about the interest rate, but at the end of the day, they're just asking about the payment. Which payment can I afford out of these options that you provided me? And I think that's really important when people go to open houses, because if there's somebody there that's already providing you with a breakdown of what the payment's going to be, then you can gauge from there what type of loan is going to work for you, whether it's an ARM or a conventional or an FHA, and what your costs are going to be as well.
Yeah, correct. I think every buyer and should know exactly where they're at before they start going out there. It's very easy to get emotionally attached to a home, and it could be $50,000 above your budget. You're not even thinking about it, but you keep on looking. And when you come back down and you sit down to the numbers, you see that maybe that's not the right house for you. So definitely, I always tell people when I speak to them on the phone, get at least a good understanding of where you're going to be, where your budget is, what you feel comfortable with, what you're pre-approved for. That way, when you're going out there, you know exactly what you can do and what you can buy. And if they don't have that, it's important, like you said, Patricia, to have something there so that as they walk in, they see the payments for the house. They know how much they make, and they can see like, well, this is going to be a little too much. Maybe I need to go back and talk to my lender to see what we can do.
Right. And I think one of the misconceptions also is that you need a 20% down payment.
Mm-hmm.
Straight across the board. Some people, some of the buyers were asking about that requirement. Do I need 20% down? And so, we were able to clarify that for them and give them that perspective on what the down payment is according to the loan types that you end up getting.
It is amazing how poor our system is at educating people on real estate. I mean, these are basic fundamental questions that people don't know. How much money do we need to buy a house? And it is shocking. And I think that's why it's so important to get people willing to educate. I always advise people, if you're looking for somebody to help you, see what they give you for free, because if they help you for free, they'll want to do a lot more if they sign on as your client. We hope that by educating you and talking about these programs and are encouraging you to call afterwards, set up a time with Gustavo or Patricia or me to figure out what you want to do. Let's do it before you start buying a house, before we're actually your customer. Let's make sure you know what you're doing, because we like to work with educated customers, and we're willing to educate the customers when we have to do that.
Yeah. And I think with the whole 20% down, Lenders, of course, everybody wants you to be able to put down more money, right? It's less risk, it's less, less burden on the lender, right? It's going to be a more secure loan. It's easier for them. So I think because of that, you get a lot more push, a lot more marketing out there for it.
Mhm.
And the programs that we need to work a little bit more on, the 3.5% to 3%, the 0% downs, the down payment assistance programs. Sometimes they get forgotten, because we know that if we push the other ones, it's going to be easier to work with someone that's going to put down 100,000 or 120,000, right? It's like working with the people that are in the 700 plus category, but the truth is that we can work down to 550 credit scores, FHA, we can work with those levels. It just takes a little bit more, maybe hand holding through the process, explaining, collecting a little bit more documents, clarifying some conditions, but we can still help get a home.
I'd say we have to roll up our sleeves, but we're both wearing short sleeve shirts, so I don't think that's really an option. But yeah, do the work. I think you have to be willing to do the work to help people. And I think that's the key. There are people who think they can't buy a house, but for the lack of education, we're here to help.
Yeah.
So, well, great. Well, look, Gustavo, I know that, and because I've been on this show regularly, I don't know if you know that, that we have your information. Your company is SenderoHomeLoans.com.
Yes.
There's a picture of your handsome face, all dressed up and ready to go. Phone number 714-334-4563. You can call or text. And then if you want to go on the website, you can get a qualifier, either refinance or purchase. Click on it. It will take you to some information.
Yeah.
You have the races, but if you want a more personal experience, go ahead, give him a call, text him, and he'll help you personally, right?
Yeah, thank you. I'm a mortgage broker. So as a mortgage broker, I work with different lenders. And that's what helps me help new home buyers is that, the people that need a little bit more help, some lenders will not do. So then I turn around and I look for other lenders that have more flexible guidelines. They can go down in credit scores, or they're willing to work with ITIN numbers, or they just have a different conditions for them, self-employed. And really then I can just help them through the whole process. So definitely here to help and provide more education. I really like providing education because that just gives someone the option. I don't try to just put them into a specific program and that's it. I try to really understand what your situation is independently, and then be able to see what lender can help provide a solution for you. One of the things that I know today is with the Fed meeting and raising the Fed fund, a lot of people are going to think that the rates are going to go up. They hear that it's going to go up 75 basis points and they think, well, if rates were at 6, now they're going to be 6.75. And that's not the case, So definitely as consumers out there are hearing the news and rates and going up, definitely speak to a lender, give me a call. I'll go through and I'll let them know, what can they expect, how the market reacts. And actually today wasn't a bad day for the rates, because the past 3 weeks, the markets, the investors, they've been gearing up for this announcement already. They knew it was coming. So, we're probably not going to see a lot of changes here. Like I said, today was actually a good day for the rates. So definitely reach out, and, I'd love to be able to help them out.
Very good. Well, Gustavo, thank you so much as always. And then Patricia, your house in Downey, is that open again this weekend, or what's going on with you?
So we have a couple of offers that we're reviewing right now.
Ooh, hold on.
I know.
You had your first open house on Saturday and Sunday?
Saturday and Sunday, yes.
And you already have offers?
Yes.
Was it the popcorn?
That's how it must have been the popcorn, but that's how busy it is right now. We
just
had
curious,
over 25 people every day.
Did the buyers walk in on their own with their agents? Did they have their own lender set up ahead of time?
We had, I would say it was about 50-50.
Right.
I would say probably 60-40. More buyers coming in on their own, and a few agents came by.
Great.
With their buyers. Yeah.
Great. And the offers you're considering, were they pre-approved? They have lenders already attached to them? We talked about one that was a mess, right? Well, I don't want to give any names out or details.
Yes.
I'm curious so you have an offer where the offer was a mess. The agent looked like they didn't really know what they're doing. And and they didn't have a pre-approval letter with the offer, which always makes you incomplete.
Yes.
So did you ever reach out to the lender? Did you ever hear from them? Are they going to work with your?
I did. I actually had my concerns about that offer, just because a lot of
Other
information-
concerns.
a lot
Besides,
of
hold
information
it.
was
They're
missing.
missing
Some of the-
forms, was incomplete. They didn't have the pre-approval
Some
letter.
of the basic information like dates should be on every single advisory, every single disclosure on the offer itself. So,
Yeah.
that doesn't mean I'm going to rule them out, but I did call the agent and say, look, your offer has to be complete, especially the dates. I mean, some of the most basic information was missing, and they're going to get cross-qualified with Gustavo. So I have some of the buyer's information, and we're going to run that loan through Gustavo just to make sure that they are qualified. And
Well, hold on. Let's explain what happened. That's a big deal. So what happens was many customers find, realty estate agents who are nice people, but they don't know what they're doing.
right,
In fact, if you go in the MLS, about half the agents that are licensed haven't done a deal in a year.
they just got their license in the last 2 years.
There you go. So they don't know what they're doing. And they were maybe even they sold houses for the last 2 years. Monkeys could sell houses. Now this is a normal market. You have to know what you're doing. And so make an offer that's incomplete in a competitive market still. So they had the lender, but the lender didn't do their job, because the lenders who are active, like Gustavo, want to help get the offer accepted.
Right.
And so what we do is say, look, we can work with your lender, but if he doesn't do his job, we can't accept your offer. We have a great lender to introduce you to. So we call that cross-qualifying, which means talk to Gustavo and let's see if it's legit or not.
Right.
And that way we know we can protect our seller. We won't get into an escrow we shouldn't get into. So well,
Yeah.
good for you.
And as when you're working as a selling agent, you're working with a buyer, you want your lender to call a listing agent to also make sure that they are, talking up the buyer, talking about their qualifications, confirming all of the financials. And that never happens. So there's a lot of lenders that don't do that, even though
what's
they know
funny?
that an offer's been submitted.
What's funny about that is you ask lenders to do that and half won't do it, or 9% won't do it, even if they say they're going to do it. The best way for a lender to get business is to call the listing agent, because typically listing agents do more business than the buyer's agents as a general rule. I own part of a mortgage coaching company. And that's what we teach is, of course, you want to call the listing agent and talk about the deal and tell them how good it is and how professional you are, and that any questions, call me, I'll take care of it. That's like free marketing for the lender, and that's how the lender gets paid ultimately. But it's amazing. Gustavo's an exception. Most agents, they just won't make that phone call. It's crazy. That's the reality.
Right. Well, the selling agent really wants to be competitive, and they want their buyer to get into the home. So they're giving me all of their financials so that I can run that loan through Gustavo and make sure that they are qualified.
Fantastic.
Yeah. No, great points. And one of the things too, that besides calling the listing agent, with every pre-approval, I also send a desktop or a loan processing findings. So if I run it through AUS, which is our automated underwriting system, and then I'm able to make sure that it goes through Fannie and Freddie Mac's initial guidelines, and then I get a successful eligibility on that, I turn that over to the buyer's agent along with their pre-approval. So that way they know that, Fannie and Freddie, it's gone through their system, and it's kind of checked a good portion of the conditions. Now it's just for the underwriter to review the actual documentation when the offer is submitted with the contract. So
very nice.
Yeah.
Very nice. Okay, well, look, I didn't want to drag it out too late, but I think it's important points. You want to know your programs, be prepared ahead of time, work with a great lender. Make sure if you're working with a real estate agent, you have a great lender. If not, call Gustavo or call Patricia. We'll put you guys together.
Yeah.
Absolutely.
Any closing comments, Patricia? Besides, if your house doesn't go into contract, come to your open house. Anything else we leave people with today?
Yeah, I just wanted to say, anybody that's looking into buying a home, don't listen to the news. The news has a really great way of distorting information and just instilling that panic in people.
Yeah.
So we are in the trenches every day of this business. So call us for information. If you have questions, if you're doubting something, give us a call. At the end of the day, it's not what the rate is. It's really what you can afford monthly. So we can give you that information.
Fantastic. Patricia, always a pleasure.
Thank you, Bill.
Congratulations on your almost sale. Good luck with it.
Thank you. Thank you, Irma and Isabel, for joining.
And Gustavo as well. Thank you for being on today.
Thank you.
Hey, we do this every Wednesday, 5 p.m. Pacific. 8 p.m. Eastern time. It's our home buyer seminar. We also live stream it on Facebook and YouTube. And oh, you know what? I didn't check the message. The chat's there.
I
Oh,
don't
there's a
see-
chat.
I see we have some Facebook watching, but I don't see any questions here.
Darwin said great information. So Darwin, I agree with you.
Yes.
You
Thank
left
Darwin.
off.
Thank you, Nina Hill, for watching.
You left off how handsome and charming I am also, though. Darwin, just
Yes,
FYI.
Bill, charming
you.
and handsome.
I'm very insecure. I need that reassurance. Okay, guys, have a great week. Thank you so much. And we'll talk to you guys soon.
Thank
Thank
you.
you.
Bye-bye.